Twilio is an interesting company that enables other enterprises to use communications and data to add intelligence and security to every step of the customer process. Interestingly, investors are curious about Twilio stock and are wondering what's a fair price to pay for this business. I'll answer that question in this video by conducting a discounted cash flow valuation on Twilio stock. Let's jump into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. All right, here is the discounted cash flow valuation model for Twilio. Now you'll notice three different sections, one highlighted in green, one in blue, and one in red. We're going to start with the section in green, which discloses the free cash flow estimates for Twilio. The section shaded in green here is what Wall Street analysts expect from the company. $670 million in free cash flow in 2024, rising to $890 million in 2028. These are the analysts on Wall Street that are following Twilio stock. Between 2028 and 2034, I'm forecasting that Twilio's free cash flow will grow at an 8.4% compounded annual rate between those years. Now, that would mean that its free cash flow will rise from $890 million up to $1.4 billion in 2034. So this company's cash flow is expected to roughly double in the next decade from $670 million up to $1.4 billion. So this company is not one that's expected to experience explosive growth in free cash flow, but steady growth nonetheless. Between the years 2035 and infinity, I'm forecasting this company will grow its free cash flow at 5%, which is the nominal growth rate of developed economies worldwide, and Twilio operates worldwide. So when I bring back all of those cash flows between 2035 and infinity, and I get the present value of them at the year 2034, that terminal value is $23.7 billion. When I sum up all of these cash flows, and I get the value of these cash flows today, it totals $14.1 billion. So in other words, the cash flow that Twilio is expected to generate between today and infinity, the present value of those cash flows, or what they're worth today, is $14.1 billion. And I'll emphasize the point present value, because money in the future is worth less to us than money today. We need to discount those future dollars, discount them. And to discount them, we need a discount rate. And that brings us to the section in blue. The discount rate that I used for Twilio is 11.19%. That's the weighted average cost of capital. I arrived at that rate by giving them a cost of debt of 7.5%, which adds a 300 basis point premium to the treasury yield of 4.5%. My capital asset pricing model, cost of equity for Twilio, is 12.42%. And to calculate that, I used a beta of 1.32, which is a beta of Twilio according to Yahoo Finance, the risk-free rate of 4.5%, and a market risk premium of 6%. Since this company has a market cap of $22.4 billion and total debt of $1.1 billion, I've given them a target capital structure of 25% debt and 75% equity. So when I combined all those features, I arrived at the weighted average cost of capital of 11.19%. The reason why we call it the weighted average cost of capital is because a company gets capital from investors from two sources typically. It's debt, borrowing money, or equity, issuing shares of the business in exchange for equity. All of us today, that's how we can start a business, right? Either borrowing money to start our business or using equity to start our business, whether it's our own equity, money that we've already saved, or whether it's equity from somebody else where we say, hey, uncle, give us $5,000 and we'll give you 10% of our business to start up. So that's primarily the way businesses start, either with debt or equity. There is something in between called preferred stock, but those are relatively rare. And for simplification's sake, I won't talk too much about it, but those do exist. Now, let's go into the section in red. The starting point for the section in red is the value of operations that we calculated in the green section. So we start with that 14.1 billion in value of operations, and we need to add the company's cash balance of 2.7 billion and subtract the debt balance of 1.1 billion. That brings us to the value of equity of $15.665 billion. But we want to know the price per share, not the price for the total equity. And so we need to divide the number of shares outstanding of 159 million, and that brings us to an intrinsic value per share of $98. Now, compared with the current market price of $145, my calculation would suggest that Twilio stock is overvalued. Now, the numbers highlighted in blue here, I received from Yahoo Finance, or I can retrieve from Yahoo Finance. And the section shaded in green here, I got from ticker.com. For transparency's sake, I wanted to share with you the sources of those numbers. And then the growth rates and some of the other calculations were my own conclusion using some of these data points that I've retrieved and analysis that I've done on Twilio stock over the last several years. I've been following Twilio for several years now, including that one hugely disappointing quarter, if you can remember back when the company removed their long run growth target. Remember, they used to say that they can grow their revenue at 20% per year at least for the long term. And then they removed that statement and said they no longer think they can grow at 20% per year. And after they removed that statement, the stock price crashed by more than 25%. That was a devastating quarter for Twilio. Thankfully, the business has turned around since then. They've reported several consecutive positive quarters, and the stock price has increased meaningfully since that date. Now, I want to say about 8 quarters ago or 9 quarters ago when they revealed that devastating long-term growth projection removal. So I've got Twilio on my watch list. This is not a company right now at current prices that I would add. However, I am interested in this business, and so I do keep tabs on Twilio. And for those of you that are interested in Twilio stock, I would say a fair price to pay for Twilio stock would be somewhere around $100. If you can get this stock for $100 or below, all else being equal, then I think you're getting a good value for Twilio stock. Anything above that, I feel like is an overpay, but that's only my opinion. You might come to a different conclusion. That's what makes markets so interesting. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.